So it looks like Federal Chairman Powell spoke yesterday and did an okay job. The markets liked it. The stock markets were up. The mortgage rates were coming down a little bit. And I think we might see a short-term bottom here. It might even be maybe a long-term bottom. So let's go over the information on what we have today on which should it be affecting housing, especially interest rates. Because our goal here is to educate and inform you guys everything real estate, especially when it comes to the financing part. So let's get over to it. You see right here, and I apologize, I do have a green screen, so everything in green does come out in black. So we got right here, we have the stock market really doing fantastic. The VIX is down. That's the volatility of the market. It's kind of easing a little bit. So we like it. Look at the Dow Jones is up over 400. The NASDAQ down or up over 160. So that's what we have in the headlines there. The next headlines we have is U.S. stock markets open. But then you have over here, this is the information we're going to go over. U.S. economy contracted more than we thought for the first quarter of 2022. And again, what is a recession? Well, you hear what a recession is. The definition basically of a recession is 2 back-to-back quarters of negative GDP. So this number here that we just went over, the first quarter of 2022, we had a negative final number, negative 1.5%. So the GDP for Q2 is ended the end of June. Pretty sure we're going to have a negative GDP. So that would put us technically, as it's defined, as a recession. So let's get to the rest of this information. That's what you have on the headlines. You can go through here some of this information. We're going to go on the economic calendar, but we have U.S. unemployment claims fall. Good news. This opinion, these are now opinions. Don't believe that the economy isn't heading toward a recession and the Federal Reserve isn't behind on the yield curve. Well, I'll prove probably in about 4 weeks that yes, we are in a recession, and the Federal Reserve, you leave that to what you think, but that's right here. Fed must boost rates by a full percentage point at every meeting to bring down the inflation. I'm going to have to disagree with you on that, as well as all the Federal Reserve people that sit on that basically came out yesterday and said they are comfortable at 50 basis points through the rest of the year. I think that'll put us to a federal funds rate that would be right in line to what we need. Economic calendar. I missed yesterday's. I apologize. I had a huge day yesterday. It's month end. A lot of people were going on holiday, and a lot of people close at month end. But we had some news come in yesterday. The oil inventory is down more than expected, and it doesn't look like much, but it's quite a bit. But it is better than where we were previously. So here's where we were at the previous reading. This was the expectations, and we exceeded that expectation. That's not good news, okay? Then we go down to the GDP. The GDP in the previous month was negative 1.4. The estimate for the previous, the revision was, they thought was going to come in at 1.3. It came in at 1.5, negative 1.5. So we know Q1 2022 was a negative 1.5. So all we need is one more quarter there. Good news on the employment front, initial jobless claims. That's how many people file for the first time, down, okay? The previous reading was 218, expectations were 215, and it came in at 210. That is great news. We have pending home sales. A lot of the pieces here, there's just not a lot of sales out there, and a lot of the closings on new construction are delayed big time. But it is, look, it's almost twice as bad as what's expected. I'll take it because we need everything to cool down. All right, so this doesn't bother me at all. We just need to slow down some, but we need more supply. Let's go over now to why you're here. Mortgage rates. Guys, what I'm going to start doing is I'm going to start doing the rate update every morning just to give like this and give you guys the rates and the news. And then twice a week, we're going to post out, and that's all I'm going to do. And then twice a week on, I think I'm going to try for Tuesdays and Thursdays, I'm going to send out educational videos going over programs and down payment assistance programs. And if you're building a home, what should we watch out for and things like that. So those will be educational videos for you guys to really learn the real estate business. So let's get on to where rates are. This is rates. These are rates by Mortgage News Daily. They serve lenders all over the country to post their rates are. So this isn't a particular rate for a particular lender. And remember, I am a mortgage broker. I work with over 130 lenders throughout the entire country. We're one of the largest brokerages in the country, and we can assist you basically anywhere in the country at this point. So I appreciate you watching. So let's get over to it. Mortgage rates for today. Well, they closed last night right here. It's too early to see what today's rates are, but we'll get a little crystal ball so I can advise you on what direction they're going to take today. So we start with a 30-year fixed rate. It's coming in at 5.27, down 2 basis points. That's what we call this, 0.02. That's where we are. They finally got rid of those darn points. Okay, so this is basically a par rate. I'm not a proponent of paying points right now, and I'll put some videos together in regards to that and the why. Okay, then we go over to the 15-year. It's coming in at 4.73, down 2 basis points as well. The FHA, I'm going to put in this category right through here, government programs, which is USDA, FHA, and VA. So those rates are coming in at 4.7. This was sticky at 5% for the longest time. Now we're down 30 basis points, basically in just a couple days. You can see we're down quite a bit from where the high was. Okay, so the direction is going good. The 30-year jumbo is 4.67. It's down 1 basis points. And the 5-year ARM is flat, coming in at 4.46. Here's a chart of the 10-year chart. You can see we're in uncharted territories. Trend for the day, or the mood of the day, is positive, modestly. Not huge, but I'll take positive. Let's go over what the MBS is doing. This is my crystal ball on what's going on in the market. So what this is a bond that trades on Wall Street, that this is the price of the bond. What's going on with the price? Why am I even watching this? Well, great question. As this price goes up, the yield on this bond, remember it's a bond and this is the price, the yield goes down. It's an inverse relationship. So if this is up, the price is up, the yield, or in this case, your mortgage rate, is coming down. Yesterday I called and said, well, because of the move that we had yesterday, I expected rates to go down 0.05. It did in the government programs and was only down 0.2 in the other ones, but I pretty much hit that one on the head. This right here should probably ease us about 0.1 to maybe 0.125 today. So that's why I'm asking you, if you're out there right now and you're in the process of a mortgage and you've applied and maybe you even locked in, please send me your loan estimate. What the loan estimate is when you apply for mortgage at any lender, they, within 3 days of pulling your credit, they have to send you what's called a loan estimate. Okay, please send it to me. Email it to me. My email address is down below. It's pretty simple. It's Dan, that's my name, at therateupdate.com. I'll review it and get back with you probably within the hour and say, okay, I'll scan the whole country, mortgage lenders all over the country, and get back with you and say, you know what you got? Fantastic. It's awesome. But in most cases, we come back and say, you know what? We can get you a lower rate, same costs. Or we can get you a lower, or the same rate, lower costs, or lower rate, same cost, or lower rate and lower costs. You got nothing to lose. And if you're locked in at the best program and the best price and everything else, rate-wise, God bless you. Stick with what you got. And that's what we'll come back with. We'll say, what you got is fantastic. Keep it. So again, if you're in the process right now, if you're building a house, we're going to have a live event today. Please be cautious. And I'm going to explain that to you tonight. I would highly, highly, highly suggest you get an attorney. And I'm going to explain all those details tonight. So please join us tonight, 7 o'clock live Central Standard Time. Love to have you join us then. So if you want to find out more about me and my team, just go to therateupdate.com. You got all this. Right over here, you can call us 844-775-5626. You can apply online. You can even schedule a calendar event. So it'll pull up our calendar and we'll schedule an event with you one-on-one. We can do it by Zoom or phone call, or this inverse thing gets me nuts. We got a chat button. And many times I'm the one on the chat. So if you're on here and you see me loaded up, just say hi and I'll respond back hi. So it is truly me. So that is it for today. Let me see if I have anything else out here. Nope, that is the same thing. So please join us tonight at 7 o'clock Central Standard Time. Ask any questions. We're going to talk about tonight is if you're going to, or if you're in the process of building a home or proposing to build a home, some pros and cons, what you might want to try to look for, and some stumbling blocks to avoid. So that will be tonight at 7 p.m. Central Standard Time. Love to see you there. So thanks for watching, guys. Appreciate the audience. If you like what you see, please don't forget to give us a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. God bless. See you soon. Bye-bye.